Okay, we're live.
We're live right now.
I just sprung it on him. All right, hey guys, I'm Marcy Billen, and I am a real estate agent here in the Oklahoma City Metro, and I have Thurman Lynch with me today. He is an insurance agent with Allstate. So if you've been on my channel before, you know that it's all about Oklahoma real estate or anything Oklahoma real estate adjacent. And recently I've been getting a lot of questions and confusion about homeowners insurance in Oklahoma. It's one of the first things that you guys talk to me about whenever you call me to help you buy or sell a house, typically buying because you want to know what that rate's going to be on your homeowners insurance. So I thought Thurman could join us.
Absolutely.
So that we could chat about it because it is very complicated. Would you agree?
It is very complicated.
Okay, cool.
Absolutely. I wish it wasn't, but here we are.
Yeah, here we are. So, okay, Thurman. So our first question is, how is insurance in Oklahoma different than in some other states?
Always a great question because as we have a lot of out-of-staters coming to Oklahoma, the first thing I have to do is like, hey, insurance is a little different here.
Yeah.
And not that it's totally different. Insurance is different state to state because different states regulate insurance laws differently. They all have their own set of guidelines. Oklahoma is just more of an adverse risk state, meaning we have more opportunity to damage your dwelling, whether that's wind, hail, tornado, which is a common question. Well, if we have a tornado, what does that fall underneath? That's your wind and hail deductible here in Oklahoma. So we have those perils, which is just a fancy word for cause of loss. In Oklahoma, it's the frequency and the severity that those happen at. We have 2 storm seasons kind of in Oklahoma. So that plays early spring. After about the middle of June, the faucet shuts off. We have really just hot weather.
Yes.
And then come fall time, as the jet stream gets active again, we start having another season. One year we had the storm in April of 21 and then October of 21. Some people got 2 roofs in 1 year.
Yeah, that's terrible.
Those are the kind of things that make the landscape of Oklahoma insurance really tough.
Yeah. Okay. So what are most of the claims that you see from?
Majority of the claims, let's just say over the last 5 years, majority of homeowners claims are wind and hail damage and water loss claims.
Water loss. So where does the water loss come from?
Water is the random things that can happen. A freeze and burst,
Okay.
maybe, or just a pipe burst in my house, which can happen, totally anytime, anywhere.
Right.
Plumbing, old plumbing systems, new plumbing systems, whether it's a workmanship issue. All of a sudden you come home and you got standing water in your floor.
Okay.
Those are probably the number one losses that we run across. Storm related here the last couple of years for sure, probably been number one on one of those.
Storm related in terms of tornado?
Yeah. When I say wind and hail, could be tornado, although here, the last couple of years it's been pretty low, but we've had some small tornadoes.
Yeah.
We did have a couple of total losses in 2023 on that. Okay. But hail damage, and you always got people always coming by to check your roof as well, to check it. And that makes the frequency of claims climb, which means more claims,
Because people are going by and checking your
Absolutely.
roof? Interesting. Like what? How come? Just because they're like finding stuff?
Yeah, or they're sales folks. We're all selling a little bit here, right? And they're roofing companies out there trying to make a living, and we understand that. But that makes maybe slight damage turn into something bigger, okay. and then those things kind of build upon each other. It's just part of the process, part of the game.
Okay. So what about, and roofs are often the questions that I get. So what type of roof would be best here?
Oh gosh, that's a double-edged sword. There's probably, from an insurance agent, not a roofer. There's 2 strategies to go with that. I personally like a class 4 shingle,
okay,
which is a which is an impact resistant shingle.
Okay.
So these have been tested for like 1.5 inch hail, and some roofer in the comments is going to get me and say that's not true. But you can look through your shingle manufacturer and say, hey, what is a class 4 impact resistant shingle? Insurance companies give discounts for those because
Yes.
they're heavier, and a heavier shingle means it's going to stay on your roof longer.
Okay.
And if it's heavier, it means it's probably thicker. And so they're designed to take hail impacts.
Okay.
Harder for hail to break that shingle,
Mhm.
and which means it's going to last longer for you, and which means we're less likely to pay out
Okay.
on that shingle. And so we give discounts for it. So it's a shingle that lasts
Gotcha.
longer. It's a shingle you're going to grab discounts for every year on it.
Mhm.
And in Oklahoma, that's a good thing.
Okay. Yeah, that makes sense. Yeah, you do get a discount. What's that? What's the discount for the class 4?
It's about 15%, and it's going to vary company to company.
Okay.
And so you can say, hey, that saves, depending on what your premium is, that saves you $400 a year. Yep, that might have cost you, like, if you get into a roof upgrade situation, that's the time to do it.
Okay.
Might cost you $1,500, $2,000 sometimes to upgrade to it.
Okay.
But you're replacing your roof, you're there. It's a good thing to try to work out, and it starts saving you money over the long term on your homeowner's premium.
Yeah, my buyers are always happy when the house that they're wanting to purchase has a class 4, and it's usually like, so I mean, it's like icing on the cake, or like it does help your house sell.
Absolutely, that's the other great part.
Yeah, it does help it sell, because our weather is not, it's not just like the wind and the hail that gets our roofs either, right?
Right, absolutely. No, you're going to add heat.
Yes.
You're going to add rain. You're going to actually add sleet, because believe it or not, sleet coming down and the wind blowing 40 or 50 out of the north in the wintertime. Yeah. One, your shingle gets brittle. Your shingle gets all these things, that we could talk about a roofing system in general. We're figuring out the better insulated, or not insulated, insulation does help, by the way, but
yeah,
the better ventilated your roof is, the longer it lasts, because we're not cooking it from underneath.
Right.
All these things come into play. A roof that's not as well ventilated as another roof, a 10-year-old roof might look like a 20-year-old roof.
Yeah.
Because they're not ventilated properly, and then it's more susceptible to being damaged by hail, and even smaller hail.
Yeah. No.
So there's a lot of things. A roof system over your most valuable asset you probably have is definitely worth it. A class 4 impact resistant, and they have super fancy metal shingles out there.
Oh yes, they're really cool looking.
Absolutely. Yeah. And they say they last like 3 roof lifetimes or something like that. Yeah. They all come with their own little lifetime guarantee.
Right.
Some people decide to dish out for the upgrade on that. Yeah. It's more expensive. It's the same discount though with us. So I think it's a little overkill. But if you can do it,
I guess it depends.
You might have your last roof that you ever put on too.
Yeah.
So that's
if it's your last house.
Absolutely. Aesthetically pleasing too. They don't look like a barn roof anymore. I mean, they make it look really good, and it is, as you said, it is a good selling point too.
It is. Yeah, I've run into very few of them here. I just remember one that I had once. Normally, class 3, I guess, shingles is typically what we see, the normal composite.
A normal what we call architectural 30-year shingle is pretty much the go-to.
Yep, for sure. And that's what the insurance company is going to give you that money for, if that's what you had before. But if you didn't have that before, then they'll...
Absolutely. You talk to your roofer, they're happy to work something out with you and upgrade you at that point in time. And you just ask your agent, hey, what's my discount going to be if I do this? Hopefully they should be able to tell you.
Yep, they should be. Okay. Talk to me a little bit. If you guys have questions, be sure to drop them in the comments, because Thurman's here for you to answer your questions, because insurance is super confusing. So I want to get into solar panels for a second.
Okay.
People are asking me a lot about solar panels. So how does it work with insurance?
First thing, you need to ask your insurance company, if I add solar panels, does my homeowner's insurance cover it? A lot of companies, the answer is no.
Oh, wow.
So you need to be aware, or else you got no coverage for your solar panels.
Okay.
Otherwise, I can only really speak on solar panels through my personal thing or what Allstate likes to do. We like to know the size of your system. So that's how many kilowatt system that is, 5 kilowatt, 10 kilowatt. And then we're going to ask, are those attached to your house or are they detached from your house? Some systems go on the roof. Some people have enough space to not put them on the roof. And we just add it onto your insurance policy. As far as not like a rider to cover it, because we're already saying in Allstate's insurance policy, we're covering your dwelling in anything that's a part of that dwelling.
Okay.
So that's anything attached to it or anything detached if it's a detached structure. But what we really need to do is know that system size so we can put it in our replacement cost calculator.
Okay.
And make sure we're covering those panels for replacement costs because that's the
Yeah.
type of policy you got.
Okay.
So that's the most important thing is to say, hey, how much does the system cost you? Now keeping in mind installation versus just the price of a panel. That stuff's going to vary, but most of the time it comes out to like $100, $150 extra a year.
Oh, okay. A year
for solar. When people get it on their house, they're actually really surprised. Like, oh, that's it.
That's not too bad.
And
okay.
I actually have solar panels myself, so I kind of got a pretty good beat on that.
Okay. Yeah, I have solar panels because yours are not on your roof, right?
Correct. Mine are detached.
Yeah, mine are on my roof because there would be no place to put them.
Right. Don't make the neighbors mad.
Yes. What happens when I need a new roof and I have solar panels?
Absolutely. So the insurance company will pay for detach and reset of those solar panels. Obviously, there's got to be a company to do it. There are plenty of companies out there that do it these days, and plenty of roofing companies now do both.
Yeah.
So they want to get paid just like anybody else. So they'll pay for that detach and reset of those solar panels.
Okay. Yeah. I like whenever we bought our house in 22, 21, I don't know anymore, but now we have at least 50% of our neighbors in our giant neighborhood have solar panels because like 7-8 years ago, nobody had a solar panel in Oklahoma. Right. Nobody. They do add value to your house. And then that's because you're basically paying upfront for your electric bill. That's pretty much what's going on.
And I mean, people that like to buy homes, right? And I've heard that argued, but I'm like, okay, if I'm going to buy a home and my electric bill is $0, I got a fixed cost that I can just cross off my list, or at least say it's $50 or less, whatever it comes out to be, because they still charge you that connection fee or whatever.
It's like $15.
Yeah, absolutely. Yeah. But it just makes selling your house. It's got to make selling your house a lot easier, right? Yeah,
as long as the people want the solar panels.
Yeah, they might think it's ugly, I guess.
Yeah, for sure. Okay, so talk to me about replacement cost and how much coverage a person needs.
So replacement cost, we'll start with the easy question first.
Okay.
Replacement cost basically says, and it's what your mortgage company's going to want if you got a mortgage.
Yes.
It basically says, we are going to replace your dwelling. And in Oklahoma, and this is one of those things that is different in different states.
Okay.
In Oklahoma, it's up to the amount listed on your declaration page. Up to the amount. Okay.
Okay.
Now you could have a rider that says, hey, we get up to the amount plus an additional 20% if needed.
Okay.
But it's up to the amount listed on your deck page. So I'm just going to do easy math, 2,000 square feet home. I'm going to say you need to be insured now for that replacement cost, depending on how fancy that home is, always. But let's just take new construction. And is it safe to say like builder's grade these days is almost some kind of a stone countertop, you know?
Yes.
And it doesn't have to be the expensive stone, right? But that's almost what I visualize builder's grade is. You're probably in that $180 a square foot range to rebuild your house.
Okay.
Close to that. Builders are obviously doing it at discounts when they build these communities. So they're cheaper than when it is like, oh, hey, I came home and my house is gone. It was a fire or something and I got to rebuild it. Unless you got a hookup, you're going to be, sometimes at the same price that you just bought your house in that lot for to rebuild your house.
Yep.
So a lot of times insurance is to rebuild your house. We don't insure your lot, your land.
That's right.
So a lot of people
because that's
are
not going in.
Absolutely. Like
hopefully.
I think the number one question, sidebar, a lot of people are first when they ask, when we get into this replacement cost thing, let's say you got an older house. Well,
Yes.
there's no way I could sell my house for that amount that you want to insure it for. Why would I insure it for that amount? Well, we don't buy and sell homes in the insurance.
Right.
We replace them. In your house that was maybe built in 1990,
Mm-hmm.
they no longer have 1990 lumber and all the supplies at the local hardware store.
It's expensive.
We have to use new stuff. And so it's not about what you can resell it for to the insurance company. It's about how much is the material and the labor going to cost to rebuild it. And you're looking at a new construction type of thing there, and plus a little bit higher. Also note that insurance companies use regional prices, not hyper local prices.
Okay.
Because they can't keep up with that, but they can keep up regionally. So it is going to be a little bit higher. And for whatever reason, loan officers, mortgage companies love for your insurance policy to cover their note or be as close to it as possible.
Sure, that makes sense.
It's an argument because I always have to say, hey, we don't cover land, we just cover the dwelling.
Right.
So whatever it takes to replace the dwelling. And that's really only an argument when there's like 5 acres involved.
Yeah, whenever it's more acreage. Like with lots, it doesn't.
Yeah, it's pretty simple.
Yeah.
But that's where you're at on replacement cost is enough to replace your policy, and you just want to know what the rebuild cost is honestly going to be on the house that you're buying. Okay.
Yeah, because are you seeing a lot of people that are underinsured?
Yes. Okay. I mean, in even with the way the inflation had hit at one point in time, because it was like within 6 months. And also, guys, know that when you do a homeowners policy in Oklahoma, and I'm probably like every state that I know, it's for a year.
Yeah.
So if you're like, hey, Thurman, insure my 2,000 square foot house for $350,000. Well, the next year your policy is automatically recalculated.
Okay.
It looks at the price of rebuilding it now for the next 12 months.
Okay.
And that's going to adjust. Well, what happens in 6 months if there was a big adjustment? You could not have enough.
Yeah.
You could not have enough.
Just like in COVID, we had that.
Absolutely. And we had a couple of homes, unfortunately, that ran into that situation. One of them had that additional 20% rider that we talked about.
Good.
It was just like an inflation guard thing.
Sure.
It was just not used when the inflation was at like 1%. It was everybody's like, well, I can save money. And so now we kind of sell it more often because we might have you for $350 for the year. And at some point in the year, it might hit 400,000.
Yeah.
Right. Not so much, I don't think this year, but and that was probably a big example, but something like that is what you want to be aware of.
Yeah. Okay. All right. We have a couple of questions. So Alan is asking, is insurance cost competitive? Apparently it's a hard question, Alan. So thank you.
That's a great question, Alan. Insurance cost is not really competitive when you talk about lining up quotes. You might have a $2,000 swing. Every insurance company evaluates you as a person and the property it's a risk. Okay. So that risk analysis is done different between every company, and they evaluate risk differently. And I'll give you a great case scenario: a new construction house.
Okay.
Alan, let's say you're walking into a brand new house, and you approach me for insurance. I'm probably going to beat everybody by $1,000 or more, and you're going to wonder, well, what's this guy leaving out?
Yeah.
Allstate values new construction. The data, basically, all insurance companies are data companies. The data says on a house that's 0 to 5 years old, we don't have any problems with. Our claims, our loss ratio on those are really low. Yeah. So they get a really good deal.
Yeah.
They get a really good deal. Yeah. So think about risk pools. And so it's where you and your house fall in that risk pool. Now think about those risk pools in different companies. Their data might show something different. And so it's all about the underwriters and the aggregators and the super smart math people that put all these together. So rates can be crazy. And then there's that little thing called a deductible.
Yes.
That can also make the rate change. And you might think you're comparing apples to apples, so
Right.
to say, and you might not be. So you just need to find someone you trust. And as I tell, and Marcy can vouch, buyers like, listen, I just want what's best for you. It doesn't matter who it's with.
Right.
And if you're having trouble comparing, show it to me. I'll give you the honest comparison. And
Yeah.
if that means it's not me, it means it's not me, because it's not about me, it's about you.
Yeah. And last year, me and Thurman had that. I sent a client over to him, and it was location, I believe, of where the client was. And he's like, nah, like, I can't insure this. You got to send him somewhere else because I'm not going to be competitive for you.
Yeah.
So,
And then that's a fire rating issue.
Yeah.
And we do fire different than some other companies.
Yeah.
So that makes our rate different. So it is best to always check, Alan. You want to check.
mhm.
It's not like it's pulling your credit when it checks
Right.
you can check 3 or 4 different companies.
Yeah.
Just know if you go to an independent, sometimes they say we check everybody, and some of them kind of do, but they kind of check it halfway.
Okay.
Because they're not pros with that.
Yeah.
So I would never let an independent say that they've checked Allstate and any other major company.
Sure.
Even though some of them probably can.
Mhm.
I would let somebody who has an office, who's vested in that, check those major carriers for you, and they
Yes.
can check the ones that don't have office fronts, which are ran by independents,
Mhm.
and to check those rates for you. But it costs you nothing, obviously, and it doesn't do anything to a credit report or a history report.
Yeah. That's what I tell people whenever they're first buying a house. Like, in the first 10 days, I'm like, you got to figure out your insurance. So call these people, but call whoever you want, and know that your insurance agent, if you choose someone who doesn't live here, it may affect you.
It is.
Yeah.
I always tell people, like, maybe they don't know the local building cost,
Right.
and
Yeah.
those local things that you're going to want someone to know, and they're
Mhm.
sure not going to be at your house if something happens.
Yeah, for sure. Elisa has a question. I think Elisa.
Oh, absolutely.
So she asked about a discount for her storm shelter she got, because you have an office.
Absolutely.
Yeah.
First of all, thank you, Miss Brent. So discount for storm shelter. Always get this question asked. And then I always kind of got to like, well, your storm shelter doesn't keep your home safe. It keeps you safe, and I'm not insuring you. That should be a life insurance app question, right?
Yeah, life insurance.
Do you have a
health
storm
insurance? I mean, health insurance
absolutely.
is really
Do you have a storm shelter you can get into?
Yes. That's a good
But
question.
a lot of people think of it because it's a safety device. So
Mhm.
it's always a question that's brought up. The answer is no, we don't have one for that. And honestly, I wouldn't probably touch your homeowner's insurance on an Oz safe room, because it's the last thing that's going to be there. If something happens, it's not going anywhere.
No.
So you've got the Cadillac
that's where you're
of
gonna
storm
live.
shelters,
Yeah,
which is really good and safe.
Yeah, that's where you'll be living. No matter
Absolutely.
your house. Yeah.
You're going to build the new house around that shelter.
Yeah, for sure. All right. And Alan just said thanks
You're very welcome, sir.
for answering the question. Cool. Okay, so I had a question in mind, and now it is gone.
I talk too much. It happens.
He does talk a lot. We've known each other for a long time. Before we were both in real estate, or I guess we're both in real estate, insurance, real estate. So, okay. I had a question. Oh, explain deductibles. That's what it was.
Absolutely, yeah.
Yeah.
Since I kind of touched on that. In
Mhm.
Oklahoma, there are 2 deductibles that can also be 1 deductible. So it's kind of magic. So
Magic
here we go.
deductibles. Fantastic.
The biggest thing I tell folks to keep an eye on is their win and hail deductible, because it is most generally, and 99 times out of 100 is done in a percent form. So you could have a 1% deductible. Some people will do a 1.5%, 2%, but think of it in a percent. Well, 1% deductible doesn't seem harmless, but first of all, you need to know it's 1% of what. A lot of folks think it's 1% of the repair cost. So if I have a $20,000 roof, I pay 1% of that. That's fine. Also, not the way that works. Insurance would be really high if that was the way it works. In this case, it's 1% of the amount we insure your house for. So if we're insuring your house for $300,000, you're 1% of $300,000, which makes that deductible $3,000.
Okay.
Now, when you think the cost of that roof might be $20,000.
Mhm.
Your part of that is $3,000. Not terrible. What you really got to watch out for is if somebody goes, "Hey, we got your quote here. It's a 2% deductible." Well, seems harmless because you're going from 1 to 2%.
Yeah.
There's like 98 more percent to go, right?
Sure.
But your $3,000 deductible just went to $6,000. So you doubled it. Red alert. A lot of companies in Oklahoma right now are going to 2% minimums.
Oh, wow.
When in
That's a
hell,
lot.
there's one company that does 3%.
Okay.
And there's one company that decides, are we going to do 2 or are we going to do 5?
5%.
So
Okay.
those are things you got to watch for, especially if you're like, hey, my insurance is getting high, I'm going to shop. Pay close attention to that wind and hail deductible detail.
Yeah.
On top of that wind and hail deductible, there's an all other peril because wind and hail is specific. It says this is your deductible for these 2 events, wind or hail.
Okay.
Well, what about if anything else happens? Well, that's a separate, what we call an all peril deductible.
Mm-hmm.
And if you remember on my lesson earlier, peril is a fancy word for cause of loss.
Yes.
That could be low as $1,000.
Mm-hmm.
It can also be 1%, the same as your deductible. You can just say, hey, my deductible is 1%.
Yeah.
So it just depends on what risk that you want to take. How much of the pie do you want to eat, basically, if you have a loss?
Mm-hmm.
And I always try to coach people on think more catastrophic, right?
Right.
However, if I think I always try to use the thing, if your deductible's $2,500,
Mm-hmm.
does it hurt you to give it up, or is it hard to come up with? Is it hard to give up or hard to come up with?
Yeah, that's how you decide.
And that's how you kind of need to decide your deductible. And where you are this year
Mm-hmm.
or next year might be totally different 4 years down the road. Hey, Thurman, I can come up with that 20. It's just hard to part ways with now. It's not hard to come up with.
Yeah.
Let's raise that deductible up a little bit.
Okay. Elisa has another question. She says, is Oklahoma at risk for skyrocketing rates? Now, so on my thumbnail, I don't know if you saw it. So that's like the cover for this video. I said, will Oklahoma end up like Florida? And so what's happening in Florida, and could that happen here?
What's happening in Florida is a lot of roof claims.
Okay.
And you got a coastal region.
Mm-hmm.
It storms all the time in Florida.
Yeah.
And susceptible to a lot of hail.
Yeah.
A lot of hail, a lot of lightning.
Yeah.
And so you have a lot of roof contractors, and their favorite thing to do down there is if the insurance company doesn't want to pay. Guys, sometimes insurance companies don't pay. It's a pain. Yeah. We got to process, but they take them straight to litigation. So now litigation fees are piling up, and there's only one way to make those rates up. Mm-hmm. Or pay for those, right? It's to adjust rates. Right now, the number one insurance company, homeowners insurance company in Florida, is the state-ran company, which is called Citizens. So most states, the taxpayers pay into a fund, and that fund is designed for, hey, if nobody else will take you, you have to go to the state fair plan, as they call it.
Okay.
So the state fair plan was your bailout. Well, right now, the state fair plan in Florida has everybody insured. And if you're wondering, Oklahoma doesn't have a state fair plan.
Right.
So your tax dollars are not going into anybody's insurance policy. Mm. The insurance commissioner in Oklahoma has a carousel that just goes, hey, Marcy, nobody's going to insure you? Hold on. State Farm is. We're going to pick them today. Or Allstate is. Oh. It's on a carousel.
So force them?
Yep, absolutely. They force them to waive underwriting requirements, and they have to insure you. So we'll still find you insurance, even if everybody says no. You just get with the Oklahoma Department of Insurance, and they will find you a home.
I did not know that.
Yeah, that's a little tidbit. So that's what's going on in Florida, and it's driving the rates crazy, and actually carriers are leaving.
Right. I've heard this.
Last year, we had a few carriers leave the state of Oklahoma.
Okay. Who was that?
United.
Okay.
And they might have went insolvent altogether. I just don't keep up nationally.
Okay.
But I know in Oklahoma, they went insolvent. Foremost is another company that is non-renewing a lot of folks. I don't know if they're going insolvent or not.
Okay.
But they're non-renewing. Other companies that are new to Oklahoma, they're still here, but they're not really writing a whole lot of business. I talked to a friend, the company that he represents, they're allowed to write 8 whole policies a month. Okay. So somehow he's supposed to make a living off of that.
Yeah.
Absolutely.
Yeah.
So everybody is slowing down because, Ms. Brent, Are we at danger for skyrocketing rates? I mean, yes. We are per capita the top 2 or 3 in the nation as far as our homeowner rates already in the nation. And that is set up with a lot of the same things that are going on in other states. But also, we have a really smart insurance commissioner that allows carriers to be in business, that I think works well with the carriers. Now, then the next question is, or what are carriers going to do?
Yeah.
Right. And that goes back to raising that wind and hail deductible, which is a lot of carriers are doing that to get
their money.
Well, not necessarily get their money, but they're sharing cost.
Okay.
Right.
Yeah.
If you think about it, if you got a 5% deductible or a 3% minimum, that's probably a $10,000 deductible on a $20,000 roof. You're 50%ing it.
Right.
And they're going to bet on that they don't have as many roof claims all of a sudden now. I mean, it's really could put roofing companies out of a job, have a lot less, the small ones that pop up.
Yes.
So you got to kind of control the market, and it's a crazy, it really is. And especially as an agent, I'm like, where is this going for me? Because I can sit here and preach 1% all day long until my carrier comes back and says, guess what? It's just 2% now. Now I'm going to tell you how great 2% is, because I got a family to feed. But it's not great. It's just really not.
Yeah,
and we're going to have to change the way we budget and the way we view things and do things. But it is a changing climate. The last 2 years had really ramped it up. I'm hoping it just levels out. If it just levels out right here and let us all catch our breath, and hopefully we're keeping our fingers crossed for no storm seasons and those things to help it to keep everything on the level is what we're hoping for.
Okay. Yeah,
Great question.
Yes. So Elisa said that California is out of control. Homeowners are forced into state-run insurance at a premium rate. So yeah, California
is another one of those states where the insurance commissioner didn't play well.
Okay.
And wouldn't let carriers adjust rates. So carriers just said, we're leaving.
Gotcha.
State Farm just is non-renewing. I think it's like 75,000 people.
Okay.
In California on their homes.
Dang. That's a lot of people.
In all state, it was a year and a half ago, said we're not insuring any more homes in California.
Okay.
We kept the ones that we had on the books.
Right.
Other than re-inspections or whatever.
Yeah.
But we didn't take any more because not friendly to play.
Okay.
Sometimes it gets political, unfortunately.
Yeah, I can absolutely see that. So talk to me about actual rates then here in Oklahoma. And I know this is super tough because I'm not giving you, hey, here's a house and here's a human that so, well, first of all, how do they come up, because you said they look at the person. Right?
Absolutely.
So what are they looking at?
Yeah, they're looking at insurance history, claims history. And believe it or not, your auto insurance affects your homeowner's insurance rate.
Okay.
So the better auto insurance you have, the longer you have it, the better homeowner's rate you're going to get. It can make it change by like $200-$300.
Okay.
Just today, I was trying to finish up a policy, and this guy's auto insurance showed expired in the database. All those things are reported. He had renewed it, but I hadn't updated my database.
Yeah.
And we were going to close business, and my price was seriously, it was $300 different. And I'm like, how did this happen? Well, his auto insurance showed expired, so I had to go update it.
Okay.
To show it. So, and then, believe it or not, we're going to run this thing called consumer reporting. Again, that's what insurance companies run on you. It's not a credit score. It's some fancy other thing that I don't even know what it looks at. 100%. I just know it's called consumer reporting. I do know that your credit's got to be figured in there somehow. Right? It's just not a hard pull or even a soft pull. So I don't know what glance of data that they're allowed to look at and all that.
Okay.
Because we're doing all this without even asking for a social security number. This is just what you can pull off of name and date of birth, right?
Okay.
So that's how we grab your information. Absolutely. All right. So they're running a consumer reporting, which is a lot of insurance history, a little bit of credit reporting that you can get with just name and date of birth. And they throw all that together, and at least in the Allstate world, we come out with an insurance score. And we put you on a scale of 1 to 50, 1 being you've done really well, I guess, 50 being You're not doing so well right now. You got room for improvement. And that determines part of your rate, right?
Okay.
The next part of your rate is the property that you're at, and then all the variables that can go on with your property. Is it an old house? Is it a new house? Because again, we're a data company, and the data says your house built in 1980, and this little area over here is giving us a lot of problems. A lot of people had bad piping or something like that. They keep really good record of that, and they're getting even better at keeping record of it, and rates are getting adjusted because of that. We now geocode. We don't even do zip code. It was by zip code.
Okay.
Now it's geocoding, which is latitude and longitude, right down to where your house is. So that gives us more precise location to fire hydrants.
Sure.
More precise location to fire department. How well your fire department is. Is it an ISO 1, 2, 3, or 4, or is it an ISO 10? All of that is how well your fire department's equipped, trained, the response time. All of that to get those certifications. There are like 4 ISO 1 companies here in the metro, which is good. But you get outside of their range, and then you can be a 1, but you can still be a 10. So
the fire department's rating affects your
homeowners insurance, 100%, and then your distance to that fire department. The magic number is 5 miles. You want to be 5 road miles, not as the crow flies, from a fire department.
Okay.
So fire department coverage makes a big deal as well.
Okay. So I'm gonna give you a house. All right. Say we have a $350,000 house. It's within 5 miles of a fire department, and it's brand new.
Okay. And let's say we're dealing with average person, right?
Average person.
Average person, meaning I'm going to say they've always had insurance. Doesn't mean you had the world's best insurance, but you've had auto insurance. You got all that. Brand new home. It just literally probably did that scenario the other day. You're still looking at $2,000 if you're really lucky, between $2,000 and $1,500 right now. Which if
for
this
your
was
premium? On
a new house.
That's really cheap.
On a brand new house, yes, absolutely, because the data says on a new house, you're in great shape. But if you remember, 3 years ago, that would have been $1,500 to $900.
That's true.
Whereas and the average premium, let's just talk about the average premium in the state of Oklahoma, which will make you guys say, yeah, that's really cheap. Average premium 7 years ago was about $1,800 with about a 1% deductible. $1,800 a year on homeowners insurance.
That's
now
really
it's probably closer to $2,800, maybe $3,000.
Okay.
In that range. So, and that's average. So some people are better, some people are worse. We want it. So anytime we're around average, we really, really like that. New construction, if insurance cost is an issue, right? And it can be when you're getting a loan, right?
Yes.
And that's why Marcy is not wrong. Don't wait. You don't want your insurance to bust your deal when you're ready to move. And I hate to even say the word bust and deal together, but you need to know up front as fast as you can, because it makes a difference. And then maybe you're a good agent, goes, maybe we need to look at new construction, because we know that will play. And those rates stay there for like 5-6 years. They're pretty low for a while. While you're in that new home stage.
Okay. So let's say someone's in a house now and they want to look at, like, if they're insured for enough money, or they want to see if they can get a lower rate. Like, what would you do to do that?
Absolutely. I mean, people are your friend, right? Who's taking care of your friends is always a good thing. I think coming from our business, a referral, we would say do that. Someone that you can have a relationship with, that's easily accessible. I still love an office that you can walk into.
Yeah, I do too.
When it comes to insurance, I don't like a work from home person or a call center person. Because they're never going to talk to you again. A call center person.
No, never.
They're going to have that one exchange with you. I can be a people pleaser. But if I got to see you again, then that's that's really hard to do because
Yeah.
you're going to come in and call me out on it. And then you're going to get on Google and you're going to, let me have it. And so those are the things, but otherwise it's just asking where the rates are and just kind of grinding and finding it. If you're a current customer of mine and you're like, Thurman, oh my gosh, my rates have gone up. We've heard this story a lot.
Yes.
What can we do? And I'm just like, hey, listen, we can only serve you so well in here. And there's only so much control I got.
Yeah.
Have you tried whoever?
Right.
Sometimes we have to say those things because again, it's not about us. It's about you. And we believe that, our one big motto is take care of the customer. Everything else takes care of itself.
Right.
That's coming and going. And we just believe if we transition you that well, that if we call you back in a year, because things are changing that fast, that you might say, hey, let's look at it again. Yeah. And then you kind of have an idea. Ideally, you want to stay put for 2 to 3 years. Please don't move. Because when you
more than that,
when you move your insurance company a lot, they rate you off of loyalty.
Yep.
And so they're like, well, why should we give person A here a great rate when we just know the data says they leave every year? So we're not gonna give them our best rate.
Right.
We get to be really biased.
Yeah.
We're like the only company, I guess, to do
Well,
that.
it's a lot of work
Absolutely.
to change your insurance. To me, I've only done it once, I think.
And it was to the point last year when people were leaving, it was mass exodus, you know, and it was funny. People were leaving upset about their rates, and they were coming in the front door upset about their rates, and we were saving them money.
Yes.
Because everybody's rates were changing.
Yeah.
And I had to tell people when they leave, like, it's going to get worse before it gets better. Like, you're leaving because your rate's up. Fully expect your rate to change. Yeah. On your next renewal with the company that you just went with, because it's kind of crazy. Now, the people that did that late in the year, they're probably a little bit safer because I think it is starting to
level.
At least for Allstate. For Allstate, we're seeing really good things. Other companies just filed for rate increases. So it just depends on where they're at on, did we decide to take rate?
Yep. Okay, I'm looking at my questions here, making sure we covered everything. Talk for a second about car insurance here in Oklahoma. How does that compare?
Gosh. Car insurance in Oklahoma, how does it compare? Like, how does Allstate compare to other folks, or how does it compare nationwide?
Nationwide.
Higher premium still.
Okay.
Now so that also depends, like, because I can go to Florida and say it's cheaper there, or it's cheaper than there. I can go to like Michigan, we're cheaper than Michigan. Sometimes we're cheaper than California, and people are like, well, everything's high in California. Miss Brent's going to go, yes, it sure is. But, and I think even with her, we weren't saving a whole lot because, again, the insurance commissioner didn't play nice out there and wouldn't let folks raise their rates. So companies were losing billions of dollars a year in keeping their rates down. So that came at a cost. So some of those folks, Arizona, were definitely cheaper than. I love people coming from Arizona. Yeah. But homeowners insurance in Arizona is like $1,000.
Right. It's nothing.
Because nothing happens out there. It's just hot.
Yeah.
So that's the other flip side. So nationally, I mean, I feel like we're probably middle of the road, maybe top 70% as far as high. Yeah. Like not on the good end of the 70, the bad end of the 70.
Right.
But not terrible. And that is something that, yes, hail damage is the biggest thing that helps that go up. Otherwise, we're just not great drivers, guys. And I'll be honest with you. People want to know, like, well, why is my auto insurance going up? Their number one thing is, well, I don't have any tickets, right? I don't have any tickets. I don't have any accidents. Okay, your insurance policy is a socialist policy, so it's about the good of the group. Yep. Last year, and I just from my numbers only, I'm one auto insurance book for Allstate in the state of Oklahoma. 60% of the dollars that I brought in left the door. Right. So out of every dollar I brought in, 60 cents left the door back to claims. And if you stop to think about that, that's 60%. That leaves a whole 40 cents left
Yep.
to pay agents, to pay claims agents, to pay all the corporate stuff, to keep money in reserves, because you got to have all this stuff.
Yep.
This is not a lot of meat left on the bone, which is why you see rates creep up. That's just,
it's profit.
it's just unfortunately,
it's for profit and for pay.
Allstate is traded on the street.
Yep.
We are one of the few publicly traded companies, and the shareholders demand we make that thing called a profit.
Yeah.
You know, and I have to tell the folks too. I'm like, we're all trying to turn a profit in life, whether that's in our households or whatever. You know, we want to have money left over at the end of the day. And sometimes we got to do what we got to do.
Yep.
Now, it would be nice to just walk into your boss and be like, hey, I got to turn a profit. You're paying me more now, which is kind of what it seems like everybody does when you're the consumer. They just raise their price and like, still got to get gas.
Yep.
Still got to pay the utility bill. So it's tough out there. That's for sure.
Yep. It is. Okay. All right. Well, that was a great conversation. It doesn't look like we have any more questions. So I have Thurman's name up here, but if you guys want his contact information, just send me an email. It's going to be in the description. It's going to be in the show notes, and it's up on the screen for you. Send me an email and I'll get you his info, or just Google him. I'm pretty sure
I'm there.
You're going to be able to find him.
With a lot of good reviews.
A lot of good reviews.
And there's some bad ones. Take your time to read those too.
Yeah, for sure. Okay, so I guess we will talk next time.
Sounds good. Thanks for having me.
Thanks so much for joining us, guys.